Stock of the day is Xero, and I think this fits quite nicely with the theme. So it is out with a strategy day today, and as part of that, it's reconfirmed its outlook for fiscal 2024 on targeting an operating expense to operating revenue ratio of around 75%. We did see revenue in its first half come in at around 1.6 billion for the period. It's also entering a bit of a relationship that will allow its customers in the US to make bill payments, but it has also unveiled, if that's the correct word, an AI sort of bot, an AI function for the Xero platform, which, is very of the times and likely will still be around, more significantly in 2028, the next leap year. So I'm going to go to Mark Gardner from MPC Markets on Xero first today. Any thoughts on how the company is being run right now?
I think the company's been run significantly better with the new CEO. One of the very few female CEOs in ASX 200 listed companies. I've always been really critical. I think the strategy they had prior to her taking over was just growth at all costs, and going into the US, their shareholders have been super critical of that because it's been very little payoff. And if anyone has friends in the US, I've got a couple of friends who've lived in the US and then come back to Australia. Because you've got state level tax and then federal tax, it's just not anywhere near as simple as what Xero did was expand to Britain, which is a very similar tax system, very few jurisdictions. But but the US, there's a new jurisdiction in every single state. There's 50 plus states, and essentially they're even looking at their payroll. They're going to have to do a custom payroll app for every single state in the US. So I think they just really underestimated how difficult it was going to be and how complex the tax system is over there. I think they're heading in the right direction. You can't just pull the plug on that investment, and I think management now has got a handle on it. They've basically become a lot more fiscally responsible, and they will eventually get there, but not at risk of the company basically. Whereas I think the strategy a couple of years ago was just they were going so well, they weren't looking out for any potential, potholes down the line. So this one, I mean, in line with the theme, I'd be happy to hold this one till the 29th of February 2028. And possibly, but from an immediate point of view, I probably wouldn't necessarily buy today. But if you had to hold for 4 years, I think it wouldn't make a hell of a lot of difference whether you got in at $90 or $100 or $125 where it is now. Yeah. I think this it's a great company who I think under new management is executing like a business, not like a revenue fueled sort of behemoth.
Well, they needed to sit up and take note of what the market was telling them, right? So Jess, over to you on Xero. So to Mark's point, it is trading at $126.80. First of all, do you think it's a company to buy and hold till 2028? But would you necessarily be keen to buy it today, or do you wait for a time when the market is just in the dumps?
Yeah, I always like to buy things when they're in the trash can. Fearful when others are greedy, and greedy when others are fearful. So if we think about the last couple of times that we've spoken on Xero on this program, the call, I've actually unfortunately said it was a hold, and I say that with reluctance because looking back at its chart, it's continued to move in bounds high to the upside, and I think that goes to that expansion overseas. And the new CEO is executing on everything that they said they would, and today, I guess, even though they are seeing a little bit of slower growth in the US than when they launched in the UK, with over 1 million customers now in the UK. So things are a little bit slower, but they're still, I guess, making their clients in the US a little bit more stickier, with allowing their clients to pay their bills via the platform. So expect more good things to come. I do like the company's Rule of 40 performance. and that is really compelling if you are holding it for the next leap year as well. And basically, this is basically suggesting that we could see future cash flows jump over 40%, and that's because management have affirmed that that rule is going to be delivered. So they're expecting earning margins to grow at a clip of 40% every year. So that's pretty exciting.
Okay. So is that a buy today because it's a quality company for the long term?
I'd be looking for a pullback, maybe see how
Okay.
it go over the next couple of days, and then look to buy for the long term.
Got it. Thank you, Jess. All